What's going on YouTube? This is Dave's Daily Trades, where I post daily AMC technical analysis, price predictions, and of course bring you the latest and greatest news. It would be so amazing if you could hit that like button and also subscribe. So guys, I do want to shout out a few users who have really been supporting this channel from day one. Shout out to Cookie Monster, aka Carson, Angelo D, and Nicole Leak. Also guys, if this sell-off here did not scare you and you guys have some diamond hands, definitely drop some comments below with diamond hands and comment I am still holding and throw up the diamond hands, boys. I'd love to see it. Anyway, guys, so for today's video, we're just going to go over a quick technical analysis and price prediction. We're also going to go over some bots and shills posting some comments because something happened last time when we had the run up past $50 that really is showing that, guys, I think we're about to have a crazy price swing. And then, of course, the final news, JPMorgan being removed from the DTCC and reviewing an article posted from 2008 when this happened as well. So stick with it until the end because we have some awesome things to cover today. All right, so into the TA. All right, so of course, this is the same chart that I did have up yesterday. This is the 1 hour time frame. And of course, guys, we are still in this downward momentum here. I do have this resistance, this downward resistance in the red line right here that has been going on just from June 29th until present day. Of course, we are really fading away from this line, which is okay. I think as long as we're holding this support right here at 37, we'll be absolutely fine. However, guys, this break that we had today of the 42 range, we really just broke out of that in early pre-market. And then just traded mostly flat for the rest of the day. So guys, I'm not really concerned at all. I mean, even if this thing goes down here to $25, it really is not going to change my mindset for AMC. I'm holding for the long term, however long that may be, it's totally fine. But some things to note here, guys, is A, we are going to have to retest this now resistance line at $42. But the beautiful thing is, guys, look at this RSI here. We are oversold. This is definitely looking healthy. And the biggest thing, we come down here to the OBV, which is on balance volume. Guys, this is barely changing. And of course, when we were at, even call it $60 on June 29th, guys, the OBV is almost the same. There is very little change. Very little. So guys, don't take this sell-off as apes are selling, the movement's over, because this damn movement hasn't even started. Things are about to get super interesting. Also, one other thing to note here on the MACD, we are looking like we're about to have a crossover. This could happen probably even pre-market tomorrow because we are right on that line. So that would be really nice to see. And especially, hopefully, we can come back up into this $42 range and retest this resistance line here that I have drawn. So if that does happen tomorrow, we'd looking at a retest of just about 43, anywhere from, just about $43, we'll call it. In this line right here, once we do break out of this, I am absolutely ridiculously bullish because that's when we're going to have absolute massive movements. Day traders are going to be coming in and swing traders are going to be coming in. And guys, I know you can argue with me all day that TAs are not always going to be 100% correct. And you guys are right on that. But here's the thing. The TAs are what day traders and swing traders absolutely live their lives on and how they pick their trades. So if we're looking at a chart that looks really good, which of course AMC is looking very good from a technical standpoint, then that means more traders are going to be coming in, which A, leads to higher volume, and B, leads to those massive price swings. So guys, the TA, sure, it might not be 100% correct, but still, I always keep it in the back of my mind just to see what may happen in the near future. All right, guys, so nothing really more to talk about on the chart. The price, it doesn't matter, guys. As long as we're holding stocks, that's fine with me, and I'm happy guy here. All right, so guys, I have been seeing so many screenshots of bot shills, whatever you want to call them, posting online with the price target of now $100. So, of course, this is just an example of 3 that I found here. And this is mostly on YouTube, but I'll see it on Facebook group chats. I'll even see it in Reddit posts too before they get taken down. But guys, the last time this happened was when we were trading at right around $14. The price target that they put saying, oh, once AMC gets to $50, I'm going to sell because I can pay off college tuition and, you know, a bunch of bullshit. So guys, what's going on now? We're seeing a lot of chitter chatter here going on, talking about the new floor $100, AMC $100. Guys, these aren't apes. Obviously, guys, we're not even going to look at the price until it's 4 digits, possibly even 5. So that's, you know, that's just a theory, guys. I can't prove this for sure. But last time we did have the massive run up, they were already setting floors. So this could be kind of the hedge fund's next game to push this to $100, which I think would really be our next price target, if you want to call it. And then, of course, start this rinse and repeat where they drop the price again, try to get people to sell, try to get people to take profits, but don't fall for it because they did it once. Whatever. Went to $72, back down to 38, whatever. They're going to do it again, and it's going to be this rinse and repeat cycle. And this is because, guys, hedge funds like Citadel literally have these incredibly smart people because they have billions, if not even trillions of dollars, who are great with human psychology. They're really trying to get us to sell out of the position because that's the only way they come out on top. As long as we just hold on for dear life, we're going to be fine and we're going to win this game because we actually won this back in January, guys. But, of course, hedge funds are going to put on a fight. So, now to the very, very interesting piece of this article. So, this was literally posted just about an hour ago on my way home from work. Here's the title here. Huge update because this is ridiculously huge. DTCC removing JPMorgan as a member and JPMorgan issuing notice to hedge funds for margin calls. So, of course, we love the term margin calls and forced liquidation because that's what's going to make us absolutely moon. Anyway, guys, so a couple points here. So, DTCC does not want to be on the hook for paying margin calls, so it removes JPMorgan from the club. Fair enough. JPMorgan, on the other hand, does not want to be on the hook when margin calls. Example, Credit Suisse suffered mega losses, sorry about that, of $5.5 billion when Archegos Capital went belly up. So, of course, guys, JPMorgan, and because of the DTCC, all the members are tied because of this regulating body here. So, of course, when Credit Suisse went belly up and lost a crazy amount, JPMorgan was also losing money too, and same with other hedge funds. So JPMorgan getting out of there, it's really, I think, the start of what's going to happen next. So as we can see, this was filed on July 13th, 2021, showing down here. And of course, guys, I will post this in the comments section if you do want to go and check this out. At least, guys, hit the upvote, give this some support because this is a really, really good find here. And of course, here too, JPMorgan warns hedge funds to expect intraday margin calls. And the biggest thing, guys, up to 7 times a day. That's madness. That is madness. I absolutely love it. And of course, we can pull out this article here. And this is from March 8th, 2008. Obviously not recent, but this is right around the time of the 2008 financial crisis. So, of course, JPMorgan hit all of these margin calls. And guys, lender missed a 28 million margin call. This is really what started all of the financial crisis and really collapsed our economy for quite some time, guys. So, you know, of course, JPMorgan, headline of the story here in March of 2008. And look at this here. Headlines, here we are. Also, another really interesting thing, this is a website I've never personally used, so do take this with a grain of salt because I'm not 100% sure, besides for this equation right here, on how they're actually calculating and where they're collecting all of this data from. But current JPMorgan probability of bankruptcy, 51%, so over 50% probability that JPMorgan will go bankrupt. And here's the thing, guys, in 2008, there were some firms that went belly up and went bankrupt. But the Fed, they're going to step in and they're going to save JPMorgan because they're such a big name and such a big player. And that's just my personal opinion, at least. But of course, we don't know. So, guys, some interesting things are brewing up here, and I am absolutely stoked. Just stoked to be a part of this community, and then also stoked that shit's about to hit the frickin' fan, guys. Am I right? All right, guys, definitely drop some diamond hands in the chat down below, and tune in for the next video. Peace out.